Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I count it an honor and a privilege to be with you guys today. We're going to get into some stocks, but if you're new to the page, go ahead and hit the like, subscribe, notification bell. And for the rest of the family, you guys have been rolling with me for a while. I want you to know that I appreciate each and every one of you guys, and thank you for continually hitting that like button early. All right. Hey, anything I say is not a suggestion for you to buy, hold, or sell. Make sure never to fall for spam, not just on my page, on anybody's page in the comment section. Okay, let's talk about the market. So we got two good days. I took some notes here. So, the market has been doing good, but we want to know if it's a bounce or a bust. You know what? I look like Casper the Friendly Ghost. Let me grab a jacket. I'm sorry, good people. All I saw was a floating head. I got to adjust this white balance on this. That's a little better because it's like, wow. Hey, what we're going to talk about is some of these companies that IPO'd really high. This is going to help you guys that are in plays or expensive stock that have high multiple. So I just left lunch with my good buddy Ron Lewis and Josh, Stocks with Josh. And Ron said, hey, what you really need to do, bud, that's the way he talks. He said, hey, what you really need to do is let people know how to not lose money or help them get out of positions that they're stuck in. And I hopefully I've been trying to help you guys. Everybody situation is different. There's not one size to fit all, and each of you have to go through your individual stocks, okay? But let's see if we could add a little assistance, right? So let me show you this, and this will kind of help us walk through. Remember 2020 and 2021, there were a lot of IPOs and the stock prices the IPO, the initial public offering, when a stock goes public, the day that happens, generally you can trade as soon as the market opens. But there were some that you had to wait a couple of hours before it opened, and the price that it's supposed to open at, it was twice that price by the time it opened because it just kept running up. And then there's deals where other people get to buy in first before we get to buy in, but we're not going to cover that right now. And what happened was, it was during this period where there was a lot of companies that had high multiples, okay? High price to earnings, all right? And so what's happening is, let's look at the charts here. Let's go through a few of them. Here's one of them, right? Look at this. Well, this is the index. We'll get back to that. Let's go to Snowflake. You guys remember when Snowflake IPO'd and it just ran up really high? Let's go to the top here. Let's just see. Companies like Snowflake, if you look here, are down almost 70%, right? You guys remember when it IPO'd, look at this. It's $126, and at one point it was $387, right? Remember Coinbase? Remember when it IPO'd, right? So let's just even go from here. Look at this, $342, it's now $69. So you got these stocks that were up ridiculously, it's down 80%, right? It's crazy. Roblox, you guys remember that? Let's look at where the high of Roblox was, $134. And now it's $30. You're talking about, look at this. That is insane. Over 78%, right? And you guys remember snowflakes. We went over that. All right. And so that's what I wanted to tell you and show you, that regardless if you're listening to CNBC, Fox Business, Yahoo, they had these analysts and these people that had these funds. They were buying at this price. They were literally giddy about, I just want in. So that's the danger in buying companies with high multiples. So, for instance, Nvidia came out with a good report. I recorded some things. I'm not gonna talk. I'm not gonna play it. We're just gonna talk it through. So Nvidia right now used to trade at 60 times earnings, right? Now it's trading at 30 times earnings. So you're talking about cut straight in half. And the sad part about it is they may have a green day today, but it may not have bottomed, right? So you're hearing a lot of talk right now. Have we hit the bottom, right? And so you guys remember some of those companies that IPO'd high. Snowflake, I wrote some down. Airbnb, Snapchat, right? Coinbase, DoorDash, Robinhood, Roblox, all of these just were just ridiculously high. And now they're coming down. Big tech is tanking, right? And so what you have to do in your own individual portfolios is find out what's a good value. Now, it used to be a fair evaluation across the board. A fair PE ratio, price to earnings, was around 15, right? But that is not written in the stone. Different areas and different markets and different sectors have different PEs that may be trading higher, or some that's trading even lower. You have banks that are trading at a lower PE. So I want you to look at your individual stock, and if the PE or the multiple of the company that you're invested in was extremely high, then you may not have seen the floor. But on the other hand, let's say the PE ratio of the stock that you have. So look at other stock in this sector, right? So let's say that the PE should be 14 and it went up to 40, right? And you bought it at 20, but it should be 15. It could be trading right now. Let's say it's supposed to be 14. I'm sorry. It could be trading at 9 right now. So if it's trading at 9, but it should be at 14, then you have money to make back on that trade, right? Now, that's not the only thing you should be looking at. You should be looking at forward earnings. You should be looking at if it's in a field that's going to grow and not shrinking, like Peloton. I'm sorry for those of you that own it. I just don't think that that's a expanding, growing market, right? I don't think that Zoom has a lot of growth. That's just me. And so you got to put all of these things together. You got to look at technicals, you got to look at fundamentals, and then you got to look at forward or future growth and future earnings, okay? Or forward guidance or future guidance, right? So hopefully some of this will help you, and your whole portfolio is not the same. So you got to go stock by stock, right? So there's some other things I wanted to talk about. Like the Dow is looking like it may break an 8-week losing streak, right? But let's talk about what's happening here. Let's look at this. So look at this. I just look and we see that the Dow was up, S&P was up, NASDAQ was up, and Bitcoin was down. It literally just turned positive when we were talking. Now, for me, it doesn't worry me because it uncoupled from the NASDAQ. That happens, right? But it literally will recouple to the NASDAQ. It's happened before. So it's not trading against the NASDAQ now just in 12 hours. It's just something temporary, and I was going to say it's going to catch up, but it looks like it's already catching up. Now, be careful because we have a 3-day weekend coming up, and Monday is a holiday, right? And so next week we'll only have 4 trading days and not 5 trading days. I want you guys to know that right now. And so we had another good week for especially the Dow and the NASDAQ. It's another good day, should I say. Yesterday was a good day. Today was a good day. Hopefully you saw a lot of green in your portfolios like I saw in mine. And I just want to talk about fair evaluations so you can go into your individual stock and look, right? So stocks like Nvidia is looking good. I like Nvidia, but remember, you were buying it at 60 times earnings. Now you're buying it at 30 times earnings. And so would you rather buy more at 30 or 60? So they're coming down. You're talking about split right in half, right? And so I want to also look at one that I was listening to today, which is Ulta, right? So I bought a little, nothing. You might as well say I didn't buy any. I bought a share of Ulta last night just to see what was going to happen because they're having their earnings now. Actually, from what I hear, it's doing good and it's up today. But the only reason why I'm going to start DCAing in good on Ulta is because Ulta, I believe, is recession proof, actually. People like to look good even during a recession, okay? Even though it's discretionary, consumer discretionary, people like to look good. Someone on one of the news outlets said it's a female Home Depot. You know how guys like to go to Home Depot? Women like to go to Ulta. And it doesn't matter how bad times get. One of the things that I told you guys at the beginning of the year, lipstick generally goes actually up during a recession. It might be a cheaper brand, but people like to look good though times are hard because you need something to make yourself look good. So I'm going to be looking into Ulta. We're going to be talking about stock that are not the hot stock, not the hot pick. We just want you guys to make money. So anything that I mention about I'm starting to buy, I'm buying very, 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 very small amounts. And I'll keep DCAing, dollar cost averaging. And a lot of people always ask, hey, what about your $5 a day? That never stops. Regardless of what I'm talking about buying, that's separate from the Larry Jones $5 a day challenge. That continues, okay? And so I believe I covered everything. Oh yeah, so the last thing I want to cover is I call it pops. I call it pops and drops, right? A lot of people are buying the drops and selling the pops. Others, it's known as rips and dips, right? A lot of companies and whales are buying the dips and selling the rips. And the reason why they're doing this is they see a lower floor coming. It's not what you think. And so if you can get in and get out to try to make some of your losses back, right? And you're not holding long, and it's not the same as day trading, right? And it's not the same as really swing trading. This is something that's done leading up to an upcoming recession even. And that's because there's a lot of uncertainty in the market, a lot of fear in the market. And myself, I'm doing that too. So another way to answer Ron Lewis's question is on some of these rips. So you got a dip and now you got a rip, right? The truth be told, the Dow right now is just regaining some of the losses that it's had. So it's not up. It's just regaining some of the losses that we've been on this downtrend. So we're still negative, right? But if you see rips, like for instance, I was overweight in financials, right? And because of the last 2 days, one of the financials, I was slightly red. Now I'm slightly green. I sold it today, but I'm not all out of financials because financials could be doing, actually, I believe it could go better, start doing good now. We heard, what was that, JP Morgan announced. And so financials are actually looking good now. And you say, well, why would you sell if it was looking good? Because I was overweight. That simply means I had too much. I had too much money in that sector. And I'm about being balanced. I'm about balancing the boat. Now I have that cash, right? Because cash is king right now. And so I sold some of my financials because I did what? Instead of buying the dips, because I already had it, I'm selling the rips. And so that's what a lot of smart money and institutions are doing right now. And if you getting a rip, If you look at a stock that you bought at a high PE or a high multiple and now it's low, right? And it dipped and now you're getting these bumps back up, then you need to go into your individual stock and see. But I'm going to end by saying this. We do not, dump in fear. We don't do that, right? We don't do that. We don't have FOMO and we don't panic sell. Some of the plays that some of you guys are in are way oversold and they will come up. Some of the plays that you guys are in should be long-term investing, though you wanted it to be a swing trade. Now, for those of you that follow me, you guys know that I sold all my NEO, right? I got a little NEO that I have in my Roth IRA that I bought in 2020. So I'm good with that. And I'm not selling that because even though it trended down, now it's a long-term hold, right? And so, I believe that they're going to make money. It's going to be more Chinese FUD coming down the road. That's why I sold 90% that I had between the two portfolios. And I only have 10% left in my Roth IRA, right? And so 10%-ish. And so now I'm holding that. So instead of it being a trade, it's an investment. And so you have to look at your individual stock. If it's a company that's going to be around and you see growth, it may be beat down in your portfolio 80-85%. But if you see future growth over the next 5 years, then why would you sell? You continue to dollar cost average and go on. And we learn from our mistakes. And the more you learn, the more you earn. Listen, you guys know that Webull has, the promotion going on. $1 up to thousands of dollars. I don't want to misquote it, but I want you guys to click the link. What is it? $12,600. All right, up to $12,600 by depositing $1 into Webull. All right, and they're working on really doing some fractional shares now, so you could do the $5 a day, Larry Jones $5 a day challenge with Webull now, and they're making it to where it's reoccurring. So that's in beta. So I want you guys to click the link, get the free stuff, $1. You're going to get a minimum of $34, and then with Moo, of course, Moo is where we're cashing up. We're just cashing up, but we're going to be doing some cool things with both platforms. With Moo, you gotta deposit $100, and right now we have that $100 to where there's a zero risk. All right. And in closing, hey, I had a conversation yesterday. We went live with my brothers Stockmo and Keenan Grace, and we talked about what's going on. We never did get to stock. I needed that talk, and in times like this, the best thing you could do is talk and get it out. It was real therapeutic for all of us. It was a really good deal. I absolutely love hanging out with those brothers, Stockmo and Keenan Grace. Those are my brothers for life. You guys are my brothers and sisters for life. I love and appreciate each and every one of you guys. We will see you later. Live, love, laugh, and learn.